Unit 19 Priority Sector Advances Targets JAIIB Principles and Practices of Banking Module B Page number 62 RBI Revised Priority Sector Lending Guidelines WEF April 23, 2015 on the basis of recommendations of an internal working group headed by Ms. Vadera. Categories under priority sector are 1. Agriculture, 2. Micro, small and medium enterprises, 3. Export credit, 4. Education, 5. Housing, 6. Social infrastructure, 7. Renewable energy, 8. Others. Computation of PS advances for target purpose. The current year targets to be computed based on adjusted net bank credit ANBC or credit equivalent of off-balance sheet exposure CEOBE, whichever higher of proceedings March 31st. Outstanding PS loans as on March 31st of current year to be reckoned for achievement of targets. ANBC is equal to NBC plus bonds or debentures in non-SLR categories under HTM category plus other investments eligible to be treated as priority sector plus outstanding deposits under RIDF and other eligible funds with NABARD, NHB and SIDBI on account priority sector shortfall plus outstanding PSLCs minus eligible amount for exemptions on issuance of long-term bonds for infrastructure and affordable housing minus eligibility advances in India against the incremental FCNRB or NRE deposits qualifying for exemption from CRR or SLR requirements. NBC is equal to outstanding bank credit in India shown in terms 6 form A under section 42(2) RBI Act less bills rediscounted with RBI or other approved institutions. Description of the eligible categories under priority section. 1. Agriculture. There will be no distinction between direct and indirect agriculture. The lending to agriculture sector shall include 1. Farm credit, short-term crop loans and long-term credit to farmers, 2. Agriculture infrastructure and 3. Ancillary activities. 1. Farm credit. A. Loans to individual farmers including self-help groups, SHGs or joint liability groups, JLGs, that is groups of individual farmers, provided bank maintains disaggregated data of such loans. Directly engaged in agriculture and allied activities viz. Dairy, fishery, animal husbandry, poultry, bee keeping and sericulture. This will include 1. Crop loans to farmers including traditional or non-traditional plantations and horticulture and loans for allied activities. 2. Medium or long-term loans to farmers for agriculture and allied activities. The example, purchase of agriculture implements and machinery, loans for irrigation and other developmental activities undertaken in the farm, and developmental loans for allied activities. 3. Loans to farmers for pre and post harvest activities viz. spraying, weeding, harvesting, sorting, grading, and transporting of their own farm produce. 4. Loans up to rupees 50 lakh against pledge or hypothecation of agriculture produce, including warehouse receipts for a period of not extending 12 months. 5. Loans to distressed farmers indebted to non-institutional lenders. 6. Loans to farmers under the Kisan Credit Card Scheme. 7. Loans to small and marginal farmers for purchase of land for agricultural purposes. B. Loans to corporate farmers, farmers, producer organizations and or companies of individual farmers, partnership firms and cooperatives of farmers directly engaged in agriculture and allied activities up to an aggregate limit of rupees 2 crore per borrower. Open bracket, loans as per categories A, open bracket 1, 2, 3, 4, close bracket, above, close bracket. 2. Agricultural infrastructure. 1. Loans for construction of storage facilities, open bracket, warehouses, market yards, godowns and silos, close bracket, including cold storage units or cold storage chains to store agricultural produce or products irrespective of location. 2. Soil conservation and watershed development. 3. Plant tissue culture and agri-biotechnology, seed production, production of biopesticides, biofertilizers and vermicomposting. For these loans, an aggregate sanctioned limit of rupees 100 crore per borrower from the banking system will apply. 3. Ancillary activities. 1. Loans up to rupees 5 crore to cooperative societies of farmers for disposing of produce of members. 2. Loans for setting up agri-clinics and agri-business centers. 3. Loans for food and agro-processing up to an aggregate sanction limit of rupees 100 crore per borrower from the banking system. 4. Loans to primary agricultural credit societies, PACs, farmer service societies, FSS, and large-sized Adivasi multi-purpose societies, LAMPS, for on lending to agriculture. Page number 63. 5. Loans sanctioned by banks to MFIs for on lending to agriculture sector fulfilling the specified conditions. 6. Outstanding deposits under RIDF and other eligible funds with NABARD on account of priority sector shortfall to compute 7% or 8% target. Small and marginal farmers will include farmers with land holding of up to 1 hectare, considering as marginal farmers and farmers with a land holding of more than 1 hectare and up to 2 hectares, considering as small farmers. Landless agricultural laborers, tenant farmers, or lessees, sharecroppers. Loans to SHGs or JLGs, that is groups of individual small and marginal farmers directly engaged in agriculture and allied activities, provided banks maintain disaggregated data of such loans. Loans to farmers, producer companies of individual farmers and cooperatives of farmers directly engaged in agriculture and allied activities The membership of small and marginal farmers is not less than 75% of number. Their landholding share is also not less than 75% of the total landholdings. 2. Micro, small and medium enterprises MSMEs. Loans eligible for priority sector classification. 1. Bank loans to micro, small and medium enterprises in manufacturing and production. 2. Bank loans up to 5 crore rupees per unit to micro and small enterprises and rupees 10 crore to medium enterprises engaged in providing or rendering of services. 3. Loans to units in Khadi and Village Industries (KVI) sector, which will be eligible for classification under sub-target of 7% or 7.5% prescribed for micro enterprises. Other finance to MSMEs. 1. Loans to entities involved in assisting the decentralized sector in the supply of inputs to and marketing of outputs and artisans, village and cottage industries. 2. Loans to cooperatives of producers in the decentralized sector, viz. artisans, village and cottage industries. 3. Loans to MFIs for on-lending to MSME sector fulfilling specified conditions. 4. Credit outstanding under general credit cards, including Artisan Credit Card, Laghu Udami Card, Swarojgar Credit Card and Weavers Card, etc., catering to the non-farm entrepreneurial credit needs of individuals. 5. Outstanding deposits with SIDBI on account of priority sector shortfall. The earlier sub-categorization within micro enterprises has been dispensed with. Important MSME units will continue to enjoy the priority sector lending status up to 3 years after they grow out of the MSME category concerned. 3. Export credit. Incremental export credit over corresponding date of the preceding year up to 2% of ANBC or CEOBE, whichever is higher, effective from April 1, 2015 for domestic banks, subject to a sanctioned limit of Rs 25 crore per borrower to units having turnover of up to Rs 100 crore. For foreign banks with 20 branches and above this to become effective from April 1st, 2017. Foreign banks with less than 20 branches, export credit will be allowed up to 32% of ANBC or CEOBE, whichever is higher. Education. Loans to individuals for education, including vocational courses, up to Rs 10 lakh, irrespective of the sanctioned amount. 5. Housing. 1. Loans for purchase or construction of a dwelling unit per family, up to Rs 25 lakh, open bracket, overall cost of house maximum 35 lakh, close bracket, in metropolitan centers, open bracket, with population of 10 lakh and above, close bracket, and loans up to Rs 20 lakh, open bracket, overall cost of house maximum Rs 25 lakh, close bracket, in other centers. The housing loans to banks' own employees will be excluded. The housing loans backed by long-term bonds, open bracket, which are exempted from ANBC, close bracket, either be included under the loans to individuals, or banks may take benefit of exemption from A and BC but not both. 2. Loans for repairs to damaged dwelling units of families up to rupees 5 lakh in metropolitan centers and up to rupees 2 lakh in other centers. 3. Loans to any governmental agency for construction of dwelling units or for slum clearance and rehabilitation of slum dwellers, subject to a ceiling of rupees 10 lakh per dwelling unit. 4. Loans for housing projects exclusively for construction of houses for economically weaker sections and low income groups, the total cost of which does not exceed rupees 10 lakh per dwelling unit. For identifying the economically weaker sections and low income groups, the family income limit of rupees 2 lakh per annum, irrespective of the location, is prescribed. 5. Bank loans to housing finance companies (HFCs) approved by NHB for their refinance or for on lending for the purpose of purchase or construction or reconstruction of individual dwelling units or for slum clearance and rehabilitation of slum dwellers, subject to an aggregate loan limit of rupees 10 lakh per borrower. The loans of HFCs are restricted to 5% of the individual bank's total priority sector lending on an ongoing basis. The maturity of bank loans should be coterminous with average maturity of loans extended by HFCs. Banks should maintain necessary borrower-wise details of the underlying portfolio. 6. Outstanding deposits with NHB on account of priority sector shortfall. Page number 64. 6. Social infrastructure. Bank loans up to rupees 5 crore per borrower for building social infrastructure. Open bracket, schools, healthcare facilities, drinking water facilities and sanitation facilities in Tier 2 to Tier 6 centers, close bracket. 7. Renewable energy. Bank loans up to 15 crore to borrowers for solar-based power generators, biomass-based power generators, windmills, micro-hydel plants, and for non-conventional energy-based public utilities, viz. Street lighting systems and remote village electrification. For individual households, limit rupees 10 lakh per borrower. 8. Others. Loan not exceeding rupees 50,000 per borrower to individuals and their SHG or JLG, providing the individual borrower's household annual income in rural areas does not exceed rupees 1 lakh and for non-rural areas rupees 1,60,000. 2. Loans to distressed people, open bracket, other than farmers, close bracket, not exceeding rupees 1 lakh per borrower to prepay their debt to non-institutional lenders. 3. Overdrafts up to rupees 5,000 under Pradhan Mantri Jan Dhan Yojana PMJDY accounts where borrower's household annual income does not exceed rupees 1 lakh for rural areas and rupees 1,60,000 for non-rural areas. 4. Loans to state-sponsored organizations for scheduled castes or scheduled tribes for the specific purpose of purchase and supply of inputs and or the marketing of the outputs of the beneficiaries of these organizations. Weaker sections. Priority sector loans to the following borrowers will be considered under weaker sections category. 1. Small and marginal farmers. 2. Artisans, village and cottage industries where individual credit limits do not exceed rupees 1 lakh. 3. Beneficiaries under National Rural Livelihoods Mission NRLM, National Urban Livelihood Mission NULM, and Self-Employment Scheme for Rehabilitation and of Manual Scavengers SRMS. 4. Scheduled castes and scheduled tribes. 5. Beneficiaries of Differential Rate of Interest CRI scheme. 6. Self-help groups. 7. Distressed farmers indebted to non-institutional lenders. 8. Distressed persons other than farmers with loan amount not exceeding rupees 1 lakh per borrower to prepay their debt to non-institutional lenders. 9. Individual women beneficiaries up to rupees 1 lakh per borrower. 10. Persons with disabilities. 11. Overdrafts up to rupees 5,000 under Pradhan Mantri Jan Dhan Yojana PMJDY accounts, provided the borrower's household annual income does not exceed rupees 1 lakh for rural areas and rupees 1,60,000 for non-rural areas. 12. Minority communities notified by Government of India from time to time. Investments eligible for classification as priority sector lending. In all the following cases, it is mandatory that the assets in which the investments is made are originated by banks on the basis of loans eligible to be classified as priority sector advances and fulfill RBI guidelines. 1. Investments in securitized assets. Investments in securitized assets representing loans to various categories of priority sector except others category originated by banks and financial institutions, all inclusive interest charged to the ultimate borrower by the originating entity should not exceed the base rate of the investing bank plus 8% per annum. Investments in securitized assets originated by NBFCs where underlying assets are loans against gold jewelry not eligible for priority sector status. 2. Transfer of assets through direct assignment or outright purchases. 1. Assignments or outright purchases of pool of assets by banks representing loans under various categories of priority sector except the others category originated by banks and financial institutions. 2. Loans purchased should not be disposed of other than by way of repayment. 3. All inclusive interest charged to ultimate borrower by originating entity should not exceed the base rate of the purchasing bank plus 8% per annum. 4. When banks purchase loan assets from banks or financial institutions, they must report the nominal amount actually disbursed to end priority sector borrowers and not the premium embedded amount paid to the sellers. Purchase or assignments or investment transactions by banks with NBFCs where the underlying assets are loans against gold jewelry are not eligible for priority sector status. 3. Interbank participation certificates IBPC. IBPC is bought by banks on a risk sharing basis. 4. Priority sector lending certificates. Outstanding priority sector lending certificates bought by the banks, open bracket, loans for affordable housing which is not part of PS loans includes 1. House construction loans eligible under PS, 2. Housing loans up to rupees 50 lakh, open bracket, maximum house cost rupees 65 lakh, close bracket, in 6 metro towns and up to rupees 40 lakh, open bracket, maximum house cost rupees 50 lakh, close bracket, close bracket. Page number 65. Priority sector goals. Open bracket, domestic banks and foreign banks with 20 or more branches, close bracket. Priority sector, open bracket, as percentage of ANBC or credit equivalent of off-balance sheet exposure, whichever higher, close bracket. 40%. Agriculture, open bracket, percentage to ANBC or CEOBE, close bracket, open bracket, it is 45% of priority sector, close bracket. 18%. Small and marginal farmer, open bracket, 7.5 percentage, 31, 3, 16. 8%, 31, 3, 16, close bracket. 8%. Weaker section, open bracket, percentage to ANBC or CEOBE, close bracket, open bracket, it is 25% of priority sector loans, close bracket. 10%. Micro enterprises, open bracket, 7%, 31, 3, 16. 7.5%, 31, 3, 17, close bracket. 7.5%. Housing finance allocation of incremental deposit for last reporting Friday of previous year, 3%. Minority communities, open bracket, percentage of priority sector advances, close bracket, 15%. Export credit, bank discretion, Prime Minister's Employment Generation Program, 50% in rural areas, National Urban Livelihood Mission, women 30%, PH 3%, minority 15%, SC or ST as per percentage in local population. Differential rates of interest within DRI to SC ST beneficiaries, 40 within DRI through rural or semi-urban branches of banks, 2/3. Foreign banks less than 20 branches, PS target 40%. RRBCs priority sector, open bracket, as percentage of total advances, close bracket. Within this, for a weaker section, as of total advances, 15%. 60%. Urban coup banks, open bracket, percentage of adjusted net bank credit, close bracket. 40%. Women beneficiaries of, open bracket, of ANBC, close bracket. Outside priority sector, 5%. Agriculture advances disbursement target for 2015-16 rupees 8,50,000 crore. Foreign banks with 20 or more branches to achieve 40% target within 5 years, open bracket, by 31/3/18, close bracket, beginning from 1/4/13, and foreign banks and with less than 20 branches to achieve 40% in 5 years beginning 31 316. Non-achievement of targets and sub-targets. Foreign banks (open bracket) with less than 20 branches (close bracket). Amount of shortfall (open bracket) WRT achievement level as on March 31st close bracket in PS target will be placed with SIDBI or other financial institution, to be shown as investment in Schedule 8 of Bank Balance Sheet, classification in PS MSC. Domestic banks and foreign banks with 20 or more branches. Amount of shortfall WRT achievement level as on March 31st in lending to overall priority sector target or agriculture or weaker section shall be called after giving 1 month notice by RIDF of NABRD or other funds with NHB or SIDBI or other FI, to be shown in Schedule 8 of Bank Balance Sheet, classification Agriculture Advance. Rural Infrastructure Development Fund (RIDF) was established in 1995 to 96. RIDF corpus is announced by Ministry of Finance every year. Corpus amount for 2015-16 is rupees 25,000 crore. Period of deposit for RIDF or SEDF or other fund fixed by RBI. Rate of interest on amount deposited with RIDF or SEDF WEF 1/4/2012. Bank rate 2% to 4% depending upon percentage of shortfall. ROI on loans disbursed from RIDF or SEDF is equal to bank rate less 1.5%. Weaker sections. The concept of weaker sections was introduced in 1980. Open bracket Krishnaswamy Committee close bracket. Compromises: 1. Small and marginal farmers. 2. Artisan, village and cottage industries where individual credit limits do not exceed rupees 1 lakh. 3. Beneficiaries under National Rural Livelihoods Mission (NRLM), National Urban Livelihood Mission (NULM), and Self-Employment Scheme for Rehabilitation of Manual Scavengers (SRMS). 4. Scheduled castes and scheduled tribes. 5. Beneficiaries of differential rate of interest DRI scheme. 6. Self-help groups. 7. Distressed farmers indebted to non-institutional lenders. 8. Distressed people other than farmers with loan amount not exceeding rupees 1 lakh per borrower to prepay their debt to non-institutional lenders. 9. Individual women beneficiaries up to rupees 1 lakh per borrower. 10. People with disabilities. Page number 66. 11. Overdrafts up to rupees 5,000 under Pradhan Mantri Jan Dhan Yojana PMJDY accounts, provided the borrower's household annual income does not exceed rupees 1 lakh for rural areas and rupees 1,60,000 for non-rural areas. 12. Minority communities as may be notified by Government of India from time to time. Interest subvention for crop loans. Government of India allowed interest subvention of 2% for FY 2014-15 to public sector banks PSBs rural to operative banks and regional rural banks (RRBs) on their own funds used for short-term credit provided to farmers up to rupees 3 lakh at 7% rate of interest. The amount will be calculated on the crop loan amount from the date of its disbursement or roll up to the date of actual repayment of the crop loan or up to the due date of the loan fixed by the banks for the repayment of the loan, whichever is earlier, subject to a maximum period of 1 year. 3% additional subsidy to farmers is also given for prompt payment of loan, where farmer shall pay effective interest rate of 4% after repayment of loan up to rupees 3 lakh. Claims for 2% subsidy to be sent to RBI on HY basis and for 3% subvention on annual basis. Open bracket. Subvention is available to small and marginal farmers having KCC for a further period of up to 6 months post harvest on same rate as for crop loan against negotiable warehouse receipt of warehouses. Close bracket.